Watch video 33 from the Workbook NISM Series 17 Retirement Advisor Certification Examination Final Feb 2024, and review the multiple choice questions and answers. 1. What is the purpose of a benchmark in investments? A. To track historical losses. B. To gauge and track the performance of an asset class over time. C. To calculate taxes on investments. D. To allocate funds for dividends. Answer: B. To gauge and track the performance of an asset class over time. 2. What is typically used as a benchmark for equity markets? A. Crude oil prices. B. Stock market index. C. Inflation rate. D. Interest rates. Answer: B. Stock market index. 3. Which index is an example of a benchmark for equity markets in India? A. Nifty 50. B. Dow Jones. C. S&P 500. D. Nasdaq. Answer: A. Nifty 50. 4. What does the benchmark return represent? A. The average performance of a fund manager. B. The return from the asset class being tracked. C. The minimum guaranteed return. D. The highest possible return. Answer: B. The return from the asset class being tracked. 5. Which of the following would be an appropriate benchmark for a bond market? A. NSE Nifty. B. CRISIL indices. C. Sensex. D. Gold prices. Answer: B. CRISIL indices. 6. What does the investment objective of a portfolio determine? A. The amount of taxes to be paid. B. The asset class in which the portfolio will invest. C. The level of government regulation. D. The diversification strategy. Answer: B. The asset class in which the portfolio will invest. 7. A fund focused on providing growth typically invests in A. Debt securities. B. Equity markets. C. Real estate. D. Commodities. Answer: B. Equity markets. 8. A fund seeking to provide income primarily invests in A. Equity markets. B. Commodities. C. Debt securities. D. Derivatives. Answer: C. Debt securities. 9. What is the key characteristic of an actively managed portfolio? A. It replicates a market index. B. The portfolio manager makes decisions on asset allocation and security selection. C. It has no management at all. D. It is based on historical trends without intervention. Answer: B. The portfolio manager makes decisions on asset allocation and security selection. 10. What is a conservative portfolio management strategy? A. Holding a concentrated portfolio. B. Avoiding diversification. C. Holding a well-diversified portfolio. D. Investing only in high-risk assets. Answer: C. Holding a well-diversified portfolio. 11. Which of the following is an example of an aggressive portfolio management strategy? A. Diversifying across multiple asset classes. B. Holding a concentrated portfolio with few securities. C. Avoiding all risk and focusing on bonds. D. Tracking the performance of a peer group. Answer: B. Holding a concentrated portfolio with few securities. 12. What is the main risk of a concentrated portfolio? A. Higher management fees. B. Significant impact on performance by any poor-performing security. C. Less profit in a rising market. D. No exposure to high-growth sectors. Answer: B. Significant impact on performance by any poor-performing security. 13. What does the investment style of a portfolio manager refer to? A. The way in which returns are taxed. B. The specific types of securities chosen for investment. C. The branding of the fund. D. The marketing strategy of the portfolio. Answer: B. the specific types of securities chosen for investment. 14. A fund that invests in mid-cap securities typically, a. sees less volatility in its returns. b. generates better returns in a declining market. c. generates better returns when markets are in momentum. d. avoids the risk of the equity market. Answer: C. generates better returns when markets are in momentum. 15. The performance of a portfolio can be evaluated relative to which of the following? A. Historical returns only. B. Tax brackets. C. Benchmark and peer group performance. D. Fund manager's salary. Answer: C. Benchmark and peer group performance. 16. Why is it important to select a relevant benchmark for evaluating a portfolio? A. To calculate taxes. B. To ensure the benchmark represents the asset class of the portfolio. C. To avoid paying fees. D. To guarantee returns. Answer: B. To ensure the benchmark represents the asset class of the portfolio. 17. Why might a 12% return from an equity fund be considered inadequate? A. If the fund manager charges too much. B. If the return from the benchmark is higher. C. If it exceeds inflation. D. If the fund did not diversify enough. Answer: B. If the return from the benchmark is higher. 18. What happens to an equity fund's performance when the equity markets decline? A. The fund will likely post positive returns. B. The fund will post returns independent of market conditions. C. The fund's returns are likely to decline. D. The fund will outperform its peers. Answer: C. The fund's returns are likely to decline. 19. Which benchmark would be suitable for a mid-cap fund? A. Nifty 50. B. Crude oil index. C. A specific mid-cap index. D. Bond market index. Answer: C. A specific mid-cap index. 20. What type of benchmark is suitable for a gilt fund? A. Nifty 50. B. Chrysler Specs. C. XVII Securities Sovereign Bond Indices. D. S&P Sensex. Answer: C. XVII Securities Sovereign Bond Indices. 21. What is the main expectation from an actively managed mutual fund compared to a benchmark? A. To generate returns exactly in line with the market index. B. To underperform the benchmark in rising markets. C. To outperform the benchmark in both rising and falling markets. D. To mimic the benchmark performance with less risk. Answer: C. To outperform the benchmark in both rising and falling markets. 22. What does peer group performance refer to in evaluating a portfolio? A. Returns from government bonds. B. Returns from other similar funds. C. Historical inflation rates. D. Bank interest rates. Answer: B. Returns from other similar funds. 23. Why is it important to compare the risk of peer group funds? A. To avoid paying management fees. B. To ensure all funds use the same strategies. C. To evaluate whether higher returns come with higher risk. D. To determine the fund manager's salary. Answer: C. To evaluate whether higher returns come with higher risk. 24. What is a key limitation when comparing peer group performance? A. Taxes on peer group funds are different. B. Peer group funds may have dissimilar strategies and styles. C. Peer group funds have identical risk levels. D. Peer group performance cannot be measured. Answer: B. Peer group funds may have dissimilar strategies and styles. 25. Which of the following helps investors evaluate whether their portfolio is earning optimally within acceptable risk limits? A. Comparing to the historical market crash. B. Measuring risk and return against benchmarks and peer groups. C. Avoiding all risk and investing in safe assets. D. Consulting only the portfolio manager's opinion. Answer: B. Measuring risk and return against benchmarks and peer groups. 26. When selecting a benchmark, what must be considered? A. The manager's preference. B. The asset allocation of the benchmark. C. The taxes on the investment. D. The age of the investor. Answer: B. The asset allocation of the benchmark. 27. Why might a fund's return be less than its benchmark in a falling market? A. Because the benchmark does not decline as much. B. Because the fund invests in a different asset class. C. Because the fund takes no risk. D. Because of poor management. Answer: A. Because the benchmark does not decline as much. 28. Which of the following is expected from an actively managed fund during market fluctuations? A. To perform exactly like the benchmark. B. To outperform the benchmark in both rising and falling markets. C. To perform worse than the market in both rising and falling markets. D. To avoid market volatility entirely. Answer: B. To outperform the benchmark in both rising and falling markets. 29. What happens if a portfolio manager adopts an aggressive strategy? A. The portfolio avoids all risk. B. The portfolio may experience higher volatility. C. The portfolio always beats the benchmark. D. The portfolio mimics the peer group. Answer: B. The portfolio may experience higher volatility. 30. Why is a diversified portfolio considered a conservative strategy? A. It reduces management fees. B. It minimizes the impact of any single security's poor performance. C. It avoids any market exposure. D. It focuses on short-term gains. Answer: B. It minimizes the impact of any single security's poor performance.